Hello traders, my name is Prince. Welcome to my channel. Today we're going to be talking about something really important when it comes to trading, which for some reason a lot of novice traders seem to ignore. But before we get into that, make sure you click the subscribe button down below, leave a like, and I will see you after the intro rolls. Welcome back, guys. So what we're going to talk about today is a fairly well-known concept when it comes to trading. But for some reason, a lot of people seem to ignore this. And it's quite simple, the reason why. So the concept I'm talking about is the concept of reading the market structure, aka reading the language of the market, understanding what the market is saying to you before you make any kind of trade decision. And the reason a lot of people kind of discount this is because people are more interested in the shiny object. They have like the shiny object syndrome. When you come into the Forex market, you guys already know there's just a lot of information out there teaching you one thing or the other, thousands of indicators. But people tend to neglect the basics, the fundamentals of trading, reading higher highs and lower lows, and even more so, reading it the correct way. So I'm talking about market resistance, structure support, higher highs, higher lows, consolidation, market being bullish, bearish, when is it bullish, when is it bearish, being able to know these things because the market told you, and being confused just because you have no idea what the market is saying to you. The market leaves you breadcrumbs, and being able to understand and actually pick up on these clues is one of the fundamental skills you need to have if you're ever going to be a profitable trader. Pay attention to the fundamentals first, and then you can add a few more indicators, one or two. Don't be one of those people with like a million indicators on their charts. One or two indicators is not too bad, as long as you understand the principles of reading a price chart. So guys, what I'm gonna show you now is a very short clip from my members area of one of our webinars, one of our trades, the trades we took. It very simply exemplifies what I'm talking about. Reading a market structure, knowing exactly when you're going with the trend and when you're going against the trend. So a trend and a counter trend trade. This is going to bring it together, marry it, so you can actually understand when to apply what mentality when it comes to reading a price chart. So have a look, guys.
Swiss. Now, this is a very interesting one because this kind of tests your ability to be a trend continuation trader and a counter trend trader. Now, I sent this trade off to you guys a couple of weeks ago. I don't even know when. Was it last week? Yeah, it was last, no, 2 weeks ago. 2 weeks ago. Cool. So again, let's just start from the daily. Now, this is an interesting one because this it tests your bias. It's an interesting one because it tests your bias to be a trend continuation trader or a counter trend trader. Now, it's very easy for you to get confused if you don't have a very strong belief or very strong technical skills in what you're doing. You can easily fall for the little shakeouts or the little fake out that the market does to you. So obviously the first thing you have to do is get a bird's eye view of what the hell the market is doing. First thing you have to do before you do anything, get a bird's eye view of what the market is doing, which means reading the price chart, reading the language of the market, speaking the language of the market, understanding what the market is telling you, and obviously acting accordingly. Now, let's just start from the beginning. Obviously, we do the same thing that we always do on the daily. We figure out the higher highs and outside returns, the lower lows and outside returns, to figure out exactly which way the market is going. You can see we have a new structure high here. We have an outside return, a new structure high. We have an outside return. All right. We have a breakout here, and we have a little blip, a little rest period for the market. And we have a massive impulse, and then we have an outside return. Then we have another impulse, and then we have an outside return coming to retest the previous outside return. Now, this is the decision zone. If the market breaks and closes below this structure level, now automatically I've gone from being bullish to being bearish. Now this is when you have to make a decision as a trader, because it's very easy to look at this and say, well, we've been bullish for the past 2, 3, 4 weeks, but you need to understand that every trend ends and consolidation might ensue, or even a bearish trend might ensue. Now, don't get married to your bias. If the market tells you something different, listen, because that's the only way you can actually survive. The trend is your friend, the market is your friend, except, it's trying to take money from you, which is kind of counterintuitive. But yeah, listen to the market anyways. Now, I was saying to myself, as soon as we got down to this area, I'm looking for a buy signal. But as you can see, I've drawn in my structure zones, and I've read what the market is doing on the daily. Now I draw down to the 1 hour to see exactly what my entry reason is. Now you can see this was the previous outside return I showed you on the daily. Now, I had no idea if the market was going to give me what I was looking for. I wasn't just going to blindly buy or sell at this area. Okay. Now, the market came down and I was looking for my reason for entry. You guys already know what I'm looking for. But as you can see, the market just easily broke and closed below. Now guys, one more thing I wanted to talk about before I go down to the 1 hour is you can see that it's like a very clean trend line as well. Now, I don't trade trend lines. I'm not necessarily big on trend lines, but one thing you need to understand is you need to think like the other trader. You need to think, well, okay, I'm looking to take a buy. Well, what are the other traders thinking? Think like the other trader. Well, because if you're buying a currency pair, there's someone on the other side selling it to you. There's someone selling as you're buying. There's someone buying as you're selling. Well, where are they looking to buy and where are they looking to sell? What are they thinking? I know a lot of people use trend lines, so I also like to put it on there. I don't have those rules in my system to trade them. I don't have rules that says I have to trade trend lines, so I don't really necessarily pay attention to them. But I draw them on there just to see what's going on. And as you can see, market came down. It just so happens that there's a confluence between my structure level and the trend line. That's fine. You can see there's not one way to trade. There's so many ways to trade in the market. If you are trading trend lines, you can actually use this as well. So market came down and broke, retested, put in this little consolidation pattern, and then broke down. But the point I'm trying to make here is, as long as we've broken past this previous outside return, now I'm not looking for a trend continuation anymore. Now I'm looking for a counter trend trade. So a counter trend trade is essentially a trade that goes opposite to your bias. Okay, so now you can see that the market was initially trending on the daily. We were in a bullish trend. And then suddenly we shifted into a bearish trend. Now I should be looking for a bearish trade, but somehow I'm still telling you to buy. Well, that's because this is a counter trend trade. Even though I've already told you, you can see it's getting a bit confusing. I've already told you that we are in a bearish trend because we broke and closed below this previous outside return, and yet I'm sending you a buy signal. Well, that's because this is now a counter trend trade. And the way I trade a counter trend trade is I look for, when I see a break, on the daily we saw a break of the previous major structure, and I also recognized another major structure below. And I know, like I told you, that the market always reacts, or usually reacts, in these major structures. So that major structure is where I was looking for my entry reason. And that's exactly what we got here. You can see a very simple double bottom with RSI divergence. Now, we took the trade as structure. Entry was as structure. Stops was below structure. Targets was at the retest of the previous structure that we just broke. That's why you have to think like the other trader. Well, okay, we're looking to take a counter trend trade. Where do you think the buyers are looking to get into the market? Well, of course, at the next level of structure. Okay, where do you think they're going to take targets? well, at the previous level of structure that was just broken up here. Where do we put our stops? Below the major structure where we're entering. So as you can see, guys, anytime I'm looking for a trade, I'm always looking for some kind of protection. I'm always looking for these zones where the market has the most kind of reaction. So we enter our structure, we put our stops at below structure for protection, and we put our targets at the previous or next level of structure, depending if we're buying or selling. Now, as you can see, the market came up. Now, don't worry about me second targets in this case. Don't worry about that. I don't want to get you too confused of taking second targets. What I want you to pay attention to is the reasoning behind this. The reason why I put my first target here in the first place, because I knew if we broke past this area, then the next area we're looking for is obviously the next level of structure. But as you can see, because we broke this previous level of structure, and we're now in a bearish trend, the bearish trend continues. Just all it did was retrace back to the previous level of structure in a bearish trend, as it always does, and then just continued downwards. Just broke down, took a little relief, and then just kept going. That's just a typical counter trend trade into a trend continuation trade. Awesome. So the next.
So guys, welcome back. Hopefully you enjoyed that video. You can see exactly what I was talking about when it comes to like taking a trade with or against the trend, reading market structure. It's very simple, it's very basic, but obviously a lot of people discount it because it's so simple. It can't be the answer, but it's 80% of all you need. Because at the end of the day, as retail traders, all we can do is read what the market is telling us, and the market speaks to us through the charts. But a lot of people, again, focus on these other external things that's not going to add anything to their trading when it comes to reading a price chart anyways. They depend more on the MACDs and the RSI and this stochastic and blah, 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 blah. But no one pays attention to actually understanding what else is on the chart. You have these people with like 1 million indicators on their chart, and they seem to worry or don't understand why they keep losing trades. But understanding the principles of reading a price chart, for me anyways, personally, and for many traders that I've come across, is like a foundation to their success when it comes to trading. So guys, I hope you enjoyed that little clip. Again, if you liked it, if you have any questions, leave a comment in the chat box below, and I'm gonna try and reply to it. Subscribe if you haven't, and leave a like or a dislike. I'll see you on the next video.